In today's video, we're looking at an extremely high-performing scalping strategy, walking you through step-by-step the correct way to approach the trade, plus looking at the actual backtesting results. You definitely don't want to miss it, so stick around. What's up, team? We are back this weekend for another backtesting video. I put a request in our Discord asking people what type of video they wanted to see, and almost all of them said backtesting videos with results. And so that's what we're here again for, looking into another crazy profitable strategy. And honestly, the backtesting results were really solid as well. We had a lot of good feedback on our last one, and so we're delving deep into more strategies with these backtesting videos. Remember, if you want to support our free content just like this, don't forget to hit the like button, hit the subscribe button below, you know you want to, and if you click the bell next to the subscribe button, you'll get an alert every single time we go live, and we day trade live on stream, showing these strategies off every weekday morning on YouTube. Now, with all that said, let's look at these sweet backtesting results. Okay, so if you know me and you know the way I've been trading in the last few weeks and months, I've been trading a lot of scalping positions, and one of my favorite ways to approach these scalps is by using the previous closing price. Now, this is a level that I've talked about many times on my channel, and what you want to understand about the previous closing price and its significance is that it's a huge level that many other traders are watching as well. You know, one of the biggest things you want to understand about levels and technical analysis is that the more people that are watching for a specific level, the more respected and overall solid the level is, because that's what ultimately gives stocks momentum, is volume and liquidity, basically how many people are watching and holding these positions. Now, with the previous closing price specifically, it's the level that all the other traders are watching because it's what ultimately dictates whether a stock goes red or green on the day. If a stock goes above the previous closing price when it was below it, that's a stock going from red to green, and if a stock is above the previous closing price and breaks below it, that's a stock going from green to red. And so again, the overarching point that I'm trying to make here is that it's a pretty significant level that many other traders are watching. Now, again, going back to my trading the past few weeks, I have been trading this previous closing price level, but what has happened a decent amount of the time is that stocks will ultimately fake me out after they break that level. And so say a stock is going up, trying to break above the previous closing price, trying to go into green territory on the day, a lot of the time we just get a quick and sudden rejection, and it would ultimately turn into a losing trade. So since I was getting faked out here, I started to look for different ways to approach these type of trades. And one of the more high percentage ways that I found here was waiting for a level to form above or below the previous closing price. If I was going long looking to ride a stock up after a break above the previous closing price, instead of just jumping in right when the stock would break that level, I would instead wait for a stock to form a specific high or low above the previous closing price and then finally push up and break that level instead. That way, I could use the previous closing price level more as a risk level instead of my actual entry point. In that way, I would also have a really organic, obvious risk and reward level. This turned out to be a really solid way to approach this trade. And so in this specific video, what we're actually doing here is looking for the backtesting results, testing this type of setup and strategy for accuracy. And so again, one of the easier things about backtesting this specific strategy is that we have a really obvious risk level. We can use the previous closing price as a risk, but in this case, I'm actually going to use 1 to 2 cents below or above that level as a risk point. And the reason for giving it that 2-cent cushion is because sometimes the stock needs to kind of find and battle that level, and it might kind of break over or under that level a few times, but ultimately still hold as support or resistance. And so using that 2-cent cushion here for my risk level during this backtesting session, I think makes a lot of sense, and it also allows it to test that level to find that support or resistance we're looking for. Since we'll have that really obvious risk level for this backtesting session, I can also use a 1-to-1 ratio for my reward target. And so if it's 5 cents away from the previous closing price when that type of breakout happens, then my reward target can be 5 cents. And if a stock pushes up and hits 5 cents over the breakout level, then I can consider that one a success. And if it breaks below the previous closing price, for instance, I can just consider that a failure. As always, I'm going to be using the IO or tally method like I usually do, and that basically just includes me tallying up the successes and failures, giving me an accuracy rate while observing the favorable conditions during that, if that makes sense. And so anyways, with all that said, let's take a look at the backtesting results one more time here. Okay, so we are done backtesting this strategy for now, and honestly my assumptions were pretty correct here because we had some solid results. We tested 4 specific stocks: NIO, WKHS, AMD, and MU, and the reason I decided to test these was because they had some pretty high relative volume on average over the last 30 days, which was the time period of this backtesting session. And so with all of that said, let's take a look at the individual results for each stock on this list. The first one was NIO, and it only showed up 7 times in the last 30 days, but the good thing about that though is 6 of them were successful with only 1 failure. That gives this one an accuracy rate of around 86%, 85.7% to be exact. And again, that's a really solid number. Although it doesn't show up that much, the times it does show up made it extremely profitable and a super high percentage play here. And so if you can have the patience to wait for this strategy to show up in a stock like NIO, it can turn out to be an extremely profitable setup to add to your strategy list. The next one was WKHS, and it had good results as well, with the same kind of overarching theme here, which is that it does not show up that much, but when it does show up, it really shines here, because it did 5 instances during the last 30 days, and 4 of those were successful with only 1 failure, giving this one a really nice accuracy rate of 80%. The next one was AMD, and if you all know me, you know I trade AMD a ton, maybe more than I really should here, but it had a total of 14 instances of this strategy show up in the last 30 days, and so it did have more show ups here with AMD, and 11 of them were successful with only 3 failures, giving this one another pretty high accuracy rate of around 79%. A really good result there as well. Although it was a little bit lower than the previous percentages, it still showed up a little bit more, giving you more chances to actually take the trades. And the last individual stock on my list was MU, and it had 10 total instances with 8 success and only 2 failures, giving this one a total accuracy rate of 80%. Looking into the overall results for this strategy, we had 36 total instances with 29 successful and only 7 failures, giving this one a total average accuracy of all these 4 stocks in the last 30 days of around 80%. These are some really good results, but there were some understandable and logical conclusions and conditions for this backtesting session. The first one is that higher volume stocks tend to perform better here, and it shows up much less, and so when it does actually show up, you need to attack it, and I think making sure you actually get a really nice trade from this if it shows up is one of the keys to success here. You only really get a few show up per day, maybe 1 or 2 depending on the stock itself, and so again, actually catching it when it shows up is crucial. Another thing that makes a lot of sense, I think, from this backtesting session is targeting the hottest sectors in the market. That way they have the most volume and liquidity because the setup tends to perform better with higher volume. Sometimes stocks will also hit the success level but then go back and trend the other way, and so they'll be successful if you scalp them with the 1-to-1 ratio like we talked about, but if you try to hold them after that, it's really unknown. In my opinion, that's kind of like a coin flip, and so I really think you should probably stick to scalping with this specific strategy. It shows us that scalping is the move to make here because the trend can change quickly and it can ultimately just turn against you really fast. Another positive thing though about this type of trade is how many times it actually avoided really big fakeouts. If I would have just taken this type of trade as soon as it broke the pre-market high, I would get faked out a ton. But if I can just wait for a high or low to form above or below the previous close and wait for that level to break using a 1-to-1 ratio, just like you can see here in the results, it turned out pretty solid overall, and it's definitely a strategy I'm ready to start testing with my real live account next week, although with small size. Alright guys, so I told you we had some good results for this one as well. It does not show up that much in the market. It only shows up a few times every day with the stocks we tested it on, but when it finally does show up, it definitely performs here. This is a strategy I'm going to be adding to my trading arsenal, and remember, if you want to watch me trade setups just like this, join us on our live streams right here on YouTube every weekday morning, and again, you can click the bell if you want that notification, as well as the subscribe button. Remember team, if you want to catch up with us after these videos or streams or whatever, you can find us in Trader Mike's Discord, which is an extremely active penny stock Discord, completely free. I'm there almost every single day, as well as my own Discord, and if you want to check both of those out, I'll include the links in the description. The people in Trader Mike's are super profitable, consistent, and friendly, and they're really open to helping new traders, and so make sure you join that one. Another great way to help support our free content here is by checking out Webull. If you sign up, you get a free stock, and if you deposit $100, you get another free stock, and it's a great platform that's super high quality, has candlestick charts, zero commissions, free paper trading platforms, plus more, and the free stocks range from like $7 all the way up to hundreds of dollars. And so you might as well roll the dice and see if you can get a free stock, and if you want to check that out, I'll include a link in the description as well. Remember guys, trading is super tough. I recommend you test all of your strategies just like this. Always, testing is going to be somewhat subjective, and so it's always best that you test your own strategies yourself. Good luck in the market guys, and we'll see you all Monday morning for our live streams. Have a good day team.